there's been nothing else like this in the ETF world as far as I'm concerned. You can kind of go back to gold ETFs, but even then, I wasn't. I mean, I was in like elementary school when that was going on, I think. So I have no idea what that was like. But yeah, in my experience, there's been nothing at all like this, nothing close to this level of interest.
Welcome everybody into another chat about the Bitcoin ETFs. Excited to be digging into what is going to be a wild week with the man who has called this for quite some time. If you've been following him on Twitter, he's been putting on a goddamn showcase of how to cover what I think might be the most exciting start to a crypto year in a long time. We got Bloomberg Intelligence ETF analyst James Seyffart on with the show today. James, thank you so much for joining us, man.
Yeah, thanks for having me. I'm happy to be here.
It's been nuts because you and Eric, your guys' team has been crushing this. You guys have said for a long time. You basically predicted it. You said 90% chance that we would have a Bitcoin ETF approved January 8th to the 10th. We are now in that window, sir. So, I mean, how has it been for you just watching this all unfold and covering it and now seeing everything basically come true to your predictions?
Yeah, it's honestly been a little wild. Like, we were pretty out of consensus when we made that call in early October. And we were very out of consensus when we basically went to 50% odds as soon as we saw that BlackRock filed on June 15th, and everyone's like, that's insane. So I'm just basically hoping that our shoelaces are tied and we can actually make it across this finish line and end up being correct, because I'm not going to say it's a victory until we're finally done.
I feel the same way. I mean, we've seen incrementally things have been improving, and you've got all the filings out today, basically the updated fee structure. So I wanted to ask you about that because basically it's been a race to the bottom. You're seeing a lot of waivers for the first 6 months, won't charge any fees. You guys put this table together that I'm looking at here. What jumps out to you when you're thinking about kind of where we are in the race to the bottom on how low those fees are and how desperate maybe some of these funds are to differentiate themselves from one another?
Yeah, I mean, as somebody who was telling everyone that the fees are going to go really low, I was thinking like sub 50 basis points, get around 40 maybe. And then Fidelity did that initially, and I was like, all right, we were pretty damn close. And now, obviously, after this morning, we have a bunch of people at 0% waiving fees. The lowest ones, we have 3 people. We have one person at Bitwise at 24 bips. We have Van Eck and Ark at 25 bips. A bunch of people are waiving fees completely for the first 6 months. BlackRock is offering a fee waiver to 20 bips for 12 months or the first 5 billion. I mean, these are serious moves by some ETF issuers, and some are legacy ETF issuers. And honestly, this is kind of what we expected from what we call the ETF terrordome. It forces people to drive down fees. It drives costs down. And yeah, I mean, this basically condensed, as far as we're concerned, like it looks like it condensed like a year or two of ETF fee war battles into literally like a 24-hour period.
What does that do, though? I mean, I guess when you apply that, what does it do to inflow expectations, right? Because you guys have also covered, historically what ETFs look like on an opening week. I remember covering this for Yahoo when I was there still as an anchor, looking at Bitcoin futures and inflows. I mean, what are the expectations now that you have such an intense battle on fees? If those are coming down, are you expecting maybe an even crazier inflow? It was $2 billion last year in terms of all the flows funding into these products, right? So, I mean, what are you expecting when we get kicked off?
Yeah, I mean, BITO blew my expectations out of the water. I had low expectations for the Ethereum futures launch, and they drastically underperformed them. And I kind of adjusted my expectations for these spot ETFs a little bit based off of kind of that and what we've seen in the markets, and I wasn't sure how low people were going to go. I think this probably does drive it up more. We've heard rumors of literally that BlackRock has billions waiting in the wings. We've heard of other people with hundreds of millions waiting in the wings to buy these things when they list. So these could, if you take them as a group, they're likely to blow every ETF inflow record out of the water based on what we're hearing right now when they ultimately launch. So initially I was thinking, I think we'll get a couple $100 million, maybe $1 billion in the first few days, first week of these things launching, and it's looking like that's going to be blown out of the water. Our expectations were, we thought like 10 billion would come in the first year. And that's flows, not that you got to realize that AUM can increase with new flows and with price performance. Mm-hmm. So thinking that 10 sounded about right. I know Galaxy Digital had guessed 14. I've seen some other crazy numbers out there. I personally don't think that's likely to occur, those crazy numbers, but it's probably going to be meaningful. But we need to see exactly what happens here.
Yeah, we had a guest on from 3IQ. Of course, they were the first Bitcoin fund in North America because they moved up in Canada, and they were predicting $50 billion in inflows for the first year. So that would be, a multitude, 5x or something over Galaxy's number that you just cited. But when you think about, I guess, what still remains, right? We've heard kind of rumors and sources talking about a vote at the SEC to make this final. Potentially could be the only wrench. It's not normal, though, right, for ETFs to have a vote like that from the commission.
Yeah, I mean, one question was the 3IQ number, was it 50 billion in AUM or was it actual they were expecting 50 billion in flows specifically? Because I think 50 billion in AUM at the end of the year, including Grayscale's current 26, I think that's in line with what we're thinking. I think that's possible. I would be shocked in general.
Yeah, we'll have to look at the actual number. I can pull that up later on when we go back and dig into it. You cited that this morning, and of course you're right. There's a bunch of different ways to calculate it, but when it comes to, I guess, what to watch for this week, right? And even as soon as, Wednesday, when we think about active trading, I mean, what are you still waiting to see in terms of that last remaining percentage chance that might make it not this week?
Yeah, so you talked about that vote. Honestly, the only vote that I can see on the SEC's calendar, and it has to be publicly listed, is there's a meeting on the 11th, which would be after the decision deadline for Ark. So as I've seen right now, there is nowhere that they would do the vote in a traditional meeting. And also, all these decisions in the past have been done via delegated authority, which basically means the staff is directing on everyone what to do. And I mean, sorry, the commissioners are directing everyone what to do. In this case, Gary Gensler is directing everyone what to do. And then the staff just basically does what Gary says, and it doesn't require a full SEC vote. I guess theoretically this might, but from what I've seen, there is no vote on the record or scheduled until the 11th. So I'm confused about some of that sourcing. Some of our reporters in Bloomberg themselves are talking about this vote. That said, you asked about like what we think could not happen. Like we're probably 95% odds that this is going through at this point. We can't. We won't go any further than that because you can't. You never know what Gary's going to do here. We know that Elizabeth Warren absolutely hates the crypto world and is very against this. So, I mean, there's a 1% chance that literally it's like, I don't know, Biden coming in and literally putting a stop in this using like executive authority, because the SEC does report through the executive branch. So it would take something like that, or just something trips things up here, right? Like maybe there's something that every issuer cannot do, or something, some last minute thing where the SEC finds a way to delay things a little bit further. Because the one way to do that would be like basically to beg Ark and 21 Shares to withdraw their application, then refile, and they could go to March. But again, like this isn't happening. They've been working at this day, night, weekend, you name it, for the last few weeks, and things seem pretty much ready to go as far as everything that I can tell and I can see.
Yeah, and I liked the way that you were phrasing that. I saw that on Twitter too, when you were digging into the idea of why would Gary Gensler have his own staff do all this work to prepare for the window that was basically, mandated in terms of after they lost that Grayscale appeal. Why would they do all this work to kind of hit this 8 to 10 window and then have to undo all that? So I would agree with that. When you talk about, I guess, looking beyond this and the fact that you and Eric at Bloomberg were so far ahead, when you think about what this might do to ETH ETF or anything beyond Bitcoin, how has that changed your thinking around those odds?
Yeah. So I'm on record as saying that I think there's a decent chance that we see an spot ETH ETF approved in 2024. So we have the first deadlines for those that are equivalent to the Jan 10th deadline from Ark and 21 Shares is from VanEck and Ark. Actually, they're due on May 23rd for those ETFs. The SEC has to make a decision. That said, while I'm probably over 50%, I'm nowhere near the numbers we're talking about for Bitcoin. ETH is a completely different asset. It has staking. There's a whole bunch of other issues that we can get into here that the Gensler might not be okay with. That said, all of the indications we've gotten from the SEC, which I've been on record for as well, is that while Gensler and the SEC won't explicitly state that Ethereum is not a security and it won't call it a commodity, every implicit action they've made with relation to the futures ETFs, and a few other things is that they are implicitly accepting it as a commodity or not pushing it for it to be a security. That said, there's nothing stopping them from making an explicit action between now and May of 2024. But I think the odds are likely that it's going to happen. But again, nowhere near as guaranteed or as proof positive as we are on the Bitcoin ETFs.
Yeah, do you feel like maybe some people are getting ahead of that? Because that's the way I was reading it too, in terms of how we even got here. It was because of Grayscale's court appeal, the ruling there, 3-0, unanimous, and okay, you have to do this, that we got, I think. Maybe you can tell me if I'm wrong, but that's why we're here now. And that hasn't happened for anything beyond Bitcoin yet, but I feel like that might be maybe one key piece in looking beyond Bitcoin in the ETF world.
Yeah, my view since the summer, it completely changed to they had Bitcoin on a pedestal all its own for the most part, is now that they've kind of, Bitcoin is still on a pedestal all its own, but Ethereum is kind of not too far behind. But
Mm-hmm.
everything else, Gary and the SEC are going to go after with a pitchfork, essentially through enforcement actions and what have you. So they're still going to go after everything else. They're calling plenty of things securities. I think they've just kind of shifted on the way that they're going to treat Bitcoin and Ethereum. So that's my base case. But again, who knows what's going to happen here.
What do you think? I think, so many people have watched your coverage around all of the excitement here. Is there anything that's jumped out to you as maybe, you do this day in, day out? You cover ETFs. This is your bread and butter. But is there anything that maybe jumps out to you as maybe highlighting, for someone who doesn't dig into this all the time, the one thing that is unique this go around?
I mean, the interest. I mean, I've had to dive in and get way more detail oriented on this. Like, there's never been a case where just seeing these filings is moving markets, which is obviously the case here. I'm talking about random regulatory documents that 99% of people, for 99.9% of other funds that have ever been filed, people didn't really care about, and it's literally moving the price of an asset when it's getting filed. So yeah, that there's been nothing else like this in the ETF world as far as I'm concerned. You can kind of go back to gold ETFs, but even then, there I wasn't. I mean, I was in like elementary school when that was going on, I think. So I have no idea what that was like. But yeah, in my experience, there's been nothing at all like this, nothing close to this level of interest. And it's for a good
Yeah.
reason. I'm not saying there's no reason for it. I mean, there's literally billions and billions of dollars at stake here. There's a lot of retail investors that care about, a lot of institutions that care about this, big asset managers. You have politics at play here. You have severe politics at play. There's deadlines. There's government overreach. Like there's a reason. There's a lot of media that is coming around this. It's not just hyperfluous, I guess you would say.
Yeah, we talked to Hester Peirce at the SEC before. She was, she's still a commissioner there. She's the one who called out basically the unfair application of rules to the Bitcoin ETF that didn't apply to a lot of other ETFs. And she's, been spot on. She said that on our show before the Court of Appeals ruled in DC. So she's, she basically has been pushing the envelope. I do wonder, though, as you kind of like prepare for all this, it's Monday. We're looking at potentially trading beginning. Like, what's your expectations in terms of where we go from here to actually have that moment when these things begin trading?
Yeah, which moment? Like when? What? Oh, the moment that they've been trading. Yeah. So we need two things here, right? So we saw all those filings after market close on Friday for
Mm-hmm.
the 19B4s. That's step one, right? You need those 19B4s to be approved. And 19B4s are just a regulatory filing that is the exchanges applying to the SEC for a rule change of how they operate. In this case, the rule change is we currently can't list Bitcoin ETFs. We want to list Bitcoin ETFs, and the SEC has to sign off on that and say that's okay. So that's step one. We need that approval. That's the approval that Ark has the January 10th deadline, right? So that's step one. We need those approvals. Nothing's going to happen without them. The second step is those S1s, which were all those documents that came this morning, Monday morning, with the fees and a bunch of other information about how these funds are going to operate. Those need full sign off from the SEC. So the first one, 19B4s, need sign off from something called the Division of Trading and Markets. And then the second ones, the S1s, need sign off from the Division of Corporate Finance. Once both of those things are done and they're approved, and the S1s, there's a few different terms. You can say go effective or approved or are completed. Basically, when those documents are filed and they don't have the red writing on them anymore that say subject to completion, that's when you know things are ready to go, and they're likely going to list within 24 hours of them hitting the SEC website. So right now, the rumor is that the SEC is gearing up to let these things begin trading on Thursday, January 11th. That said, there's no guarantee that happens. Something could snag it and slow it up. The approvals we think will happen on or by January 10th. I'm expecting on January 10th at this point.
Mm-hmm.
But we think they could begin trading on the 11th, or potentially begin trading the week after, the day after Martin Luther King Day, which is January 16th. So that's Tuesday. But it's all indications we're hearing from other people are that it's happening this week.
Yeah, those are the same indications that we've been hearing as well. I do wonder, I guess, when you put all these pieces together, right? in terms of the inflows, the excitement you said that's basically like nothing you've ever seen before. I mean, what has it been like for you personally as an ETF analyst covering all this? I've been monitoring your Twitter. I've been seeing Eric. It seems like you guys are being pulled into being crypto degens now. What's it been like for you?
So to be clear, I've been like kind of in this world on that crypto side for a long time now, just for personal interest, and I've been covering the Grayscale saga and all these things
Yep.
for a while. Before I became a full analyst, I was an associate that reported to our commodities analyst and Eric, our ETF analyst. So I covered cryptos directly from the commodity strategy point of view as well. So I've been kind of like around, but like no one really cared, I guess, until recently. But yeah, it's been wild to see a lot of the people that I followed and interacted with slightly start coming to me for advice on how these things are happening. A lot of it, talking to a lot of clients and institutional clients on the Bloomberg terminal who are just trying to wrap their heads around what's happening. And I literally have not been able to put my phone down answering questions via email or instant Bloomberg or Twitter DM, you name it.
Does it seem odd though? I mean, I guess, we were just chatting with the first Bitcoin fund earlier today in Canada. They got like, I guess they have the Bitcoin fund, spot funds, which is the first one, and then they have a Bitcoin ETF. Combined, it's a little bit less than $1 billion in terms of AUM that they have at 3IQ. But I mean, a lot of the skeptics have said these have existed outside the US, so we're not entirely sure how big they were going to be. In fact, I think Eric said that a couple, maybe it was last year. But it's like, are you surprised at the excitement now, given that these have existed? Maybe the fees are cheaper, but is there any piece of you being like, I do wonder why this excitement is so big now?
I think the excitement currently happening is even a little higher than I was expecting, but I'm not that shocked by it because the Bitcoin futures ETFs, one, are just not what advisors and institutions would want to use. They're inefficient ways to get exposure to this asset class because you have to roll futures and there's costs in doing that, right? So I always thought that we have always been in the camp that this is the important moment. This is the holy grail of Bitcoin exposure on the traditional financial rails, as far as we're concerned. So we always thought it was going to be a big deal. That said, as far as I view it, for the most part, people who wanted exposure to this asset class could just download an app on their phone and get it. The problem is the advisors and the institutions, they can't really do that for the most part. There's a lot of work that has to go in. And if you're an advisor and you're thinking about putting 2% of your client assets, 3, 5 even, like, do you really want to go through the process of getting like institutional custody set up with Coinbase or taking care of your client's keys on your own? Like, that's just not something you want to deal with for 2% of a client's portfolio. But if you can just click buy an ETF that's cheap and provides exposure to the underlying asset directly, that's a much better much better selling point. And with these fees dropping, as we talked about at the beginning, I think that gets a lot more impactful and important to these end investors. So I don't know. And the other thing is, like, we didn't really mention is how low these fees are, which you showed before. That's going to trickle into the ecosystem, the crypto ecosystem. I mean, some of these institutional custody platforms are charging higher than these full expense ratios on these ETFs. So it's gonna trickle through. Look for commissions on some of these platforms that are typically trading these things to start tightening in competition with these ETFs once they're launched and are operating efficiently on the U.S. markets.
Yeah, it's a really good point. I was just thinking about Coinbase as well in terms of them as a company and structurally how much they've leaned into custody as being a huge piece of the business for them, shifting away from kind of the retail focus. And, how many of these ETF issuers are using Coinbase for custody? It does seem pretty wild. I don't know if there's anything there that would jump out to you because Fidelity seems to be the only one that really has anything going on with their own custody implications.
Yeah, I mean, the one thing I would say is just look at like what Coinbase and Gemini and some of the other platforms charge for recurring buys via your phone. Like they're charging like 3% or more round trip fees in some cases. So I think hopefully ETFs will cause them to like lower that for the end investor. Look, at the end of the day, this competition, yes, it might hinder or hurt some of these more crypto native players who have been rent seeking, I guess, in some ways. But at the end of the day, this is going to be really good for end investors. And that's something I've been saying for years. Once this happens, once the ETF ecosystem gets a hold of this asset class, it is going to drive down prices across the board. That's what they've done
And the
throughout
irony.
history and continue to do.
Yeah, and
Yeah.
the irony that it was this. Gary Gensler says he wants to protect consumers, and now it's him losing a court battle that is now eventually, perhaps, if we believe what you're saying there, and I hope it's true, will trickle into maybe protecting retail investors on the Coinbase part. But James, I appreciate you coming on here, man. We got to have you back because 10 billion. I'm going to have you on record. You got the over on 10 billion. In terms of net inflows in the first year. I think that's a safe over. I'll give you that one. But we'll have you check back in terms of how this is going because you and Eric, shout out to you guys for nailing this. You guys have been ahead of the pack in terms of adjusting your odds up to 90. Now we're at 95. Congrats on being right on this one, man. And hopefully we can have you back in to check in on how those inflows are going as we prepare for launch.
Yeah, I'm on the over on 10 and under on 25, I guess is probably where I would sit. But time will tell.
Yeah, time will tell. We'll check back in on that. I might take the over on 25. That way one of us can be right and one of us can be wrong. I'm not afraid of that. But James, thank you so much for coming on, man. James Seyffart there. Appreciate you taking the time, and be well. All right, I think we're all good. That'll do it for us here as we continue to monitor everything going on with the Bitcoin ETFs. You can check out more at Coinage.Media. Our thanks to James, and a big shout out to Eric and the rest of the Bloomberg Intelligence team. Just doing a great job there. For everybody here at Coinage, shout out to them. And we will continue to track and see when trading begins, but I'm in the same camp. We're getting very close, ladies and gents. We'll be back with more updates later on. Thanks again.